So now we'll be looking at chart patterns. So we'll be looking at tops and bottoms and triangles, specifically double tops, double bottoms, multiple tops, multiple bottoms, same thing. And then triangles, which will include symmetrical triangles, ascending, descending triangles, and pennants and wedges. They're all the same thing. I just like to think of them as tops, bottoms, and triangles. So bottoms. Bottoms is basically when you have something, and again, I took examples of a few stocks, same thing with cryptos, and we'll take a few look at some crypto examples shortly. Bottoms is basically when a financial product hits a specific price, bounces off of it, hits it again, bounces off of it, then you have a double bottom. Double top would be if it was the inverse. So in this situation, I have something that hit the top, hit a point again, and hit that same point again, and that could be a triple top. In this situation, there was 4 times, so multiple top. And again, here, a stock reached a certain price, bounced off of it, bounced again, we have a multiple bottom. Now, what does that tell us? It just tells us that there is a big buyer, or there are big buyers at that price, right? So, if this is, let's say, Bitcoin, and let's say this is $6,000, and then every time it goes to $6,000, bam, it bounces off of it. What does that tell me? It tells me that Bitcoin is very attractive to people at $6,000. Everybody wants to buy it at $6,000. It reaches there, everybody's like, oh, it's a really good price, let me buy some there. And because they're buying it there, they're pushing the price up, and it goes back up. Now, next time it goes back there, maybe it's the same buyers, they're still there, or maybe it's other people who saw on the chart that this is a big support, because a bottom is a support. So they place orders there. So when the price goes there again, it bounces off that price because there's a lot of buyers. And that's how you have, bottoms and tops. Again, in this situation, if I want to buy this product, well, will I buy it here? Not too sure. Maybe I'm going to place an order here because I know if it goes to that price, there's so many buyers at that price that it's going to bounce off. So I might not put that exact price. In this situation, this is $14. I would put it just above it. So maybe $14.02 or 3 cents. So I'm above the other buyers, and I would get priority because my price would be higher. Obviously, I don't want to put it at the price, because if I put it at the price, then maybe there's a lot of people in front of me. And again, if there's a lot of people who have their orders at the same price, it's first come, first served. So it's time priority if you have the same price. So if they came in before me, I have to wait until they get filled before I get a chance to get filled. So I might want to put a price just above them. But all in all, to say that, this makes sense, and we look at that because it's an actual visual representation of supply and demand. It tells me that there's a lot of demand around the bottoms, and there's a lot of supply around the tops. So something is going to have a hard time breaking a range where there's a lot of supply and a lot of demand, and something is going to have a problem breaking above a range where there's a lot of supply because there's so many sellers. Okay. We have wedges or triangles. In this way, this is an ascending triangle, meaning you have a resistance at the top, but you have a support that continuously goes up. So the price here, and again, let's say this coin, let's call it coin ABC, is going up. Then when it goes up, sellers start selling it at this price, at $1, let's say. Goes down, buyers start buying it here, push it back up. Now it goes back up to $1, sellers still sell it at that same price. It's going back down, buyers are getting a little bit of antsy, they're not waiting until it goes back here, they're buying it at higher price. It goes back up, sellers sell it at the same price, goes back down. Buyers buy it at a higher price again. So here in this situation, buyers keep buying at higher and higher price. So they're less patient, they're more aggressive. And then at one point, the price here, gets wedged a bit, and it has to break. And it could either break up or down. Now, in an ascending triangle, it's more likely to break up because buyers are being more aggressive, but it could actually break either way. And when it breaks, it'll go that way. Most likely, it's not 100%. There's no 100% here. It's always probabilities, right? And we're adding probabilities in our favor. So in this situation, how you think about this is basically, look, prices are driven by supply and demand. And I have supply and demand, and demand is pushing the price up and supply is pushing it down. And at one point, these people who are selling and these people who are buying, they're going to meet, and one person has to win. Either the buyers want to buy more than the sellers have, or the sellers want to sell more than the buyers have, and then push it in that direction. And this is the same thing with all types of triangles, and that's why I always just think of them as triangles. They're going to wedge, and then the longer they wedge, or the more they go in, the bigger the fight between the buyers and seller, the stronger the explosion after. Okay, and again, here we go. We have something that wedged here, and then I can erase here. Nice, and then it broke. And again, here when it broke, you know what? This resistance line becomes the support, and you can see actually price went back here, and maybe it bounced off, maybe not, but more likely, right? And again, another example here. Let's check it out on TradingView and see if we can spot any of those. Okay. So, well, let's check Bitcoin USD if we can spot anything. Log scale, good. Okay. So I had this uptrend here, and look at this. There seems to be a bit of a support around 6,000 here. On the side here, you can draw lines. So I can click here. Sorry. And draw a line. Sorry about that. Around $6,000. So let's put a line here. Here, yeah. There is that a little bit of a support around 6,000. And this happened several times. It hit 6,000, bounced off of it. Hit 6,000 again, bounced off of it. Hit 6,000 again, bounced off of it. So 6,000 is a really nice place to buy. So I bought around this range here, a few weeks ago because everybody sees that price as a really good support for the time being. It could break and not be that anymore. But if you are buying and you see it, if fundamentally you do want to buy Bitcoin and then it's around that range, well, it's a pretty good place to buy. Now, you can also draw a line here because you see that sellers are selling at higher and higher prices. And this is a bit of a descending triangle where sellers are selling at higher and higher prices. You see, here they were selling here, then sold here, then they were selling here, they were selling here. They didn't let it go up higher. This doesn't mean it's going to break down for sure. But what this would tell me is if I am a long-term investor and I'm looking to buy this product, I might just want to wait a bit. I might say, you know what? Look at this. This thing moves. It went all the way up here. We had this huge, uptrend. And then we have this consolidation a bit, which, it's nothing. If you look at the price of now compared to or last year, we're higher. It's really nothing. And if I compare it to 2 years ago, we're so much higher. It's crazy. But as a buyer, would I just buy here? Maybe no. Maybe I want to wait to get a better entry. Maybe I want to buy around the support. Or maybe I think that right now, the price is getting wedged so much that it might break in either or direction. And because it might break, I might want to wait. I might want to wait until it either breaks this line, because if it does break this line, then this resistance, then we're going up, right? Okay. So I might want to wait, and then I'll just buy here if it breaks over this resistance. So I might get a little bit of a worse price, but I'll be more certain of my trade. Or I'll wait, and if it breaks below, then I won't buy right now, and I'll wait until it reaches a new low, a new support, and then I'll buy it at another time. So I'm timing my entry. That's all I'm doing. I'm not saying I don't want to buy this product or I want to buy it. I'm just saying, okay, well, if I wanted to buy it, should I buy it now? And that's what technical analysis is going to help us do. Because, look, do you want to buy something at 7,000 right now, or maybe you wait until 6,000? The difference between 7,000 and 6,000 is so 1/6. So 16% difference. Why don't I buy something at a 16% better price? I can buy more of it, right? And so if it goes up, I'll make more. Why not be a little bit more certain about my transaction? And this is really what this is going to help us do, technical analysis. Find, better entries than usual. And I think there's one trade I've done here just a few days ago on Ontology. Ontology Bitcoin. And I wasn't actually looking at, okay, so I want to buy this, right? But it's in a very big downtrend, okay? So would I want to buy something that's in a downtrend? No, right? But, there was some news coming out on it, and I really wanted to buy it because I think something nice is going to happen with it. So I'm like, okay, well, I need to wait for a good entry. So I'm not just going to buy here or buy here. I need to find myself a good entry. And look and behold, it broke this, it broke the resistance. And then, so I had bought some here. And this was a trade, so I don't want to, it was a bit different than investing. But as an investor, it breaks here, you want to buy. And again, you can see the volume here is huge. We'll talk about the volume in the next lecture. But it gives you even more certainty. But here, it broke over the resistance. And I'll talk about the volume in the next one, it will be easier. So that would be a good entry. Now look at this, there was a wedge here, and you might not see it correctly because I was trading it on a smaller time frame. So if I look at a 4-hour chart, and as I was looking at it, I was looking at the fact that the price started getting wedged, right? There was a lot of buys, and then again, this was not a long-term investment. It was more of a swing trade where I bought something, I hold it for a few days to up to a few weeks. So I'm looking at 4-hour charts, but it started getting consolidated here. And then I'm like, okay, well, you know what? This is either going to break down and I might have to get out of my position, or if it's going to break up, then it's going to continue in that direction and I might hold it for longer. And so I waited, and then it broke over this wedge, right? This triangle. So the price was, getting wedged here, and then bam, broke over. And look again at this. As soon as it broke over, went up, and you see even volume. We'll look at that in the next lecture. And then went up in that direction. Okay, I can even extend that and see if it keeps going. So these are things that you would use as, a bit of an indicator to help you get better prices, and it adds really to your profit when you look at it at the end of the day. It helps you really figure out, do I buy now, and time your entries, which is a big part. Somebody bought Bitcoin at one point this year and made money on it. He bought it at 6,000, sold it at 7, or bought it at 6, sold it. It went from 6 to 12,000, so he made 100% return. Somebody else bought it at 12 and sold it at 6, and he lost 50%. So, timing your entries is also important. As an investor, you want to buy things either when it's trending in a direction and it has momentum, or when it's it's breaking out of a trend and then it's going in the opposite direction. So you have to time your entries in that way, to not buy something as it's going in a different trend than where you want it to go.